Well, hello, everybody. You're in a surprisingly cheery mood considering what's going on the markets. But we did say summer doldrums suck. And now we have a whole bunch of stuff incinerating itself right now as you speak. Thank you, Sean Donnelly and TNT Tesla and K8 and Gaffalo for coming. And Andy. Andy's up in Australia as well. Early. Let's jump in. This is called Recession Signals. And I'm going to go through quite a bit of macro stuff today, as well as Bitcoin stuff. Some bad news, some very scary news, and some excellent news generating itself right now as you speak. So let's jump in. That was a quick audio check to make sure everything's working. We are still at 2.24 trillion. Fear and greed is still at 57 when it should be like at 10, considering what's going on right now. And Bitcoin has just slipped under that critical 63K support. When we talk support, by the way, it's always approximate. It doesn't mean it won't dip below. We are $150 below 63K. Yesterday's video is called 63K support. So we'll see what's going on. But we'll compare Bitcoin to the traditional markets, try to get a handle on exactly where we're going next. And this is not financial advice. And shout out to Patreon who make all this possible. Hi from Taiwan. Faithful Patreon member. Hello there, Iva Tube. Nice to meet you, Taiwan. Brilliant. I love seeing places from all over the world. So drop some flags in the comments. Warms my heart. Let's talk about where we are so far. Bitcoin monthly returns. Yes, July was down 3.9%. August up. July up 3.9%. August now still hovering up about 2%, 2.5%. So not cataclysmic. But if you look at the rest of the market, it is brutal out there. Let's get into the news. Let's talk about JP. He did it. He did it. We were talking a long time about, raising rates too late and then cutting them too late. So too late in and too late out, which is not good. So much for the soft landing. There are lots of signs that the economy has severely cracked and we are heading for a recession. Let's dig into some of those right now. I love seeing the flags. We've got Scotland and England and Netherlands. Always have the Netherlands and India. India's awake too. I love it all. So first of all, I did say yesterday, coincidentally, bad news is bad news again in yesterday's video. And guess what? The Kobeissi letter came out and said, same thing, bad news is bad news again. And how you know recession fears are rising. That's when the jobs report stronger than expected, sell stocks. Jobs report weaker than expected, sell stocks. Jobs report as expected, sell stocks. But it's crazy. Let's check out some of the other stuff. Before we get into the ugly macro news, there's a bit of good Bitcoin news. I don't want to depress anybody too much. The VanEck head says Bitcoin will hit $2.9 million per coin when central banks adopt it. We know we could be on the cusp of some game theory here. We're not sure when or how or which countries. But there's a lot of talk about this. And remember, once it happens, it'll be gradually and then suddenly, kind of like the pension funds coming into the space as well. Now, November, there's now JP Morgan forecast a 1% Fed rate cut. That is 100 basis points. That's like 4 cuts all at once by November. We're not sure exactly when, but this is alarming. I always say risk happens fast. Again, I've said that 100 times in the last 3 years. Risk happens fast. We are seeing a lot of things spike real fast. I'll show you 2 or 3 spiking charts as well. But before we jump in, shout out to Bitcoin Munger. So Bitcoin Munger wants to get this straight. We are on the precipice of both World War III and a recession, which will force the Fed to cut rates and inject even more liquidity into the system. And you are not buying the dip with both hands. Not financial advice, this is from Bitcoin Munger. Bitcoin is poised to skyrocket under these conditions. I always say, BTC loves a crisis, and it sure does. Let's talk about war. People are like, what's going on? A lot of people have their heads down so deep in crypto they don't have an idea what's happening around the rest of the world. I tweeted 2 weeks ago, wag the dog is in play. And that's when right before an election, the powers that be tried to distract the populace. And U.S. President Joe Biden said that the U.S. military was redeploying forces in the Middle East in order to protect Israel from an expected future attack by Iran and its proxy forces, while also urging for a de-escalation of regional tensions and a ceasefire for Gaza. And these comments came after a phone call from Ben Netanyahu, I think, out of Israel, saying, Let's fire something up. I think war is awful. War is bad. Instead of sending military, they should send diplomats like in the old days to talk and riddle out peace. So let's get into the charts. A lot of exciting and terrifying charts to show you. So seatbelts on, please. First of all, when you look at the Bitcoin space itself as a whole, this is from SwissBlock, there's a significant development here. And that is all fundamentals moved to bullish. A week ago, there were 3 or 4 of them were negative. And the market is slow to follow them, but they show that the ecosystem health and underlying ability to sustain price action going forward is very positive. However, if we look at the market type, that's good. Market risk is low. The price momentum sucks. Okay, but on-chain fundamentals are very bullish. So what happens? What's happening? And the answer is the macro is happening. Market is scared. They're scared of, guess what? Recession. And as I've been saying for a long time as well, by the time you find out you're in a recession, you've actually been in it for quite some time. SAM rule, you've also heard about it here. We just triggered it, and the SAM rule has been triggered, and it is a absolutely take it to the grave, reliable recession indicator. And as of today, it is triggered. Since 1950, the SAM rule has indicated only one false positive in 1959. And even then, 6 months later, the recession happened. This is it, guys and gals. We're in a recession. And Fed Chair Powell said it's not an economic rule, but it is a statistical regularity. In any event, here we are. Yes, let's bring back Jerome Powell. Ta-da! Torching everything. Well done. SAM rule triggered. Recession is here. No ifs, ands, or buts. And we saw that with the ISM data yesterday I spoke about. Tanking. Not just in the US, all over the world. Germany, cataclysmic. China have issues. But there's more. Let's check this out. This is from Macro Micro. US Fed Watch probability of rate hike cut just is now guaranteed. I actually said that yesterday as well. It was guaranteed 100% sure thing. The question is when? Now. It's going to be September or earlier. And this is all the stuff that Bitcoin Munger was talking about. It's coming. And not just that, not it, but them from Kobesi. Prediction markets are now pricing in a base case of 4 interest rate cuts to the end of the year. That is in the next 20 weeks. 50 basis point interest cut is now 80% chance of that happening in September. What's incredible, yesterday, there was a 20% chance of a 50 basis point cut happening in September. Today, 1 day later, it's 80%. This is the spike chart number, 3 so far. The overnight change is absolutely alarming. So I want people to know, and I know that the Fed and the Treasury and economies all over the world are like, uh-oh, we're going to have to fire up that money printer and cut rates a little bit quicker than we liked. Soft landing, probably not going to happen. That's just the reality. Now, market, job market. I always speak about how fake the job market is, but markets are all red on the latest jobs report. And I've been talking about this for a while. A few things have happened. First of all, a huge decline in non-farm payrolls, 114K versus 175K, as unemployment also jumped from 4.1% to 4.3%. By the way, that's what triggered the SAM rule I just discussed. And prior revised down from 206K to 179K. As I say, every 12 weeks, they take the numbers and they cut them down even more. Hopefully nobody will realize or recognize exactly what they're doing. So to avoid an economic crash landing, rate cuts are going to have to come real soon. But remember, even if they do that, there's such a delay. There's a massive delay from the time you activate rates to the time you cut them. It's not like you cut rates and a week later the jobs reappear. Not the way it works at all. And the fourth spiking chart of the day from Dylan Leclerc. The S&P Implied Volatility Index, VIX. For all those VIX traders out there, it has just spiked through the roof. Meanwhile, this is interesting. The Bitcoin Implied Volatility Index is nothing burger. Again, Bitcoin likes a crisis. It's designed to thrive in these conditions. And now we have a situation as well where Bitcoin and gold correlation is on, which is another feather in the cap of recession incoming. Ladies and gentlemen. Okay, that was the macro ugly, but there's good news. A lot of good news, actually. First of all, Morgan Stanley are incoming with 15,000 sales guys. They will be selling Bitcoin for their clients. I don't know on average how many clients each sales guy has, but I'd imagine they have at least 20 to 50 customers. You do the math. And by the way, if you are a customer of Morgan Stanley, you got big bags. They don't cater to the average retail schmo. They cater to high net worth individuals. Hunwies, as I call them, like Humvees, Hunwies, HNWIs. They are going to light the latter half a light, okay? Because Bitcoin is scarce. I'll get to that in a minute too. And from VanEck, this will pump Bitcoin into the second half. Again, those 15,000 brokers will be recommending Bitcoin ETFs. By the way, the only two that they will be recommending will be Blackrock IBIT and Fidelity BTC, FBTC, just in time for the second half kickoff. As we've been talking about, the 90-day post-halving sucks. We got through that. Summer doldrum nearly over. September, August are always kind of crappy anyway. But maybe they're getting crappy earlier so we can get out faster. Let's look at some history from Econometrics as well. This is a cool little chart. And again, where do we stand so far over the last 5 years? Well, if you look at this exact same point in time over the last 5 years, the blue cycle is 2019, we're up 169%. The orange cycle, which is 2023, we're up 77%. The blue cycle at this stage, which is the one I want you to focus on, that's the 2020 cycle. That's the analog for what we're talking about here, 57%. So far this year, we're up 53% in 2024. And the only one that was really nasty is 2022, bear market, down 50%. So when you average all of these up, Bitcoin is up 53% year to date. And is it good? Is it bad? As Nick would say. Well, comparing to the previous 5 years, it's average. Bitcoin is having an average year. But remember, okay, cast your eyes on that blue, light blue line going to the top. I added a big gray 2020 arrow. That is the analog for where we are. The second half will be on fire, and I am sure of that. So just be patient, everybody. I know people are freaking out. They're saying, where's my $100,000 Bitcoin? I want it already. I want it now. 53% isn't good enough for me so far this year. I want 100%. I want 100,000. No, if we do go to 100,000, it'll be like a 6 or 7x. Anyway, let's look at some more charts as to where we are going. And this is from Titan of Crypto. And this is Bitcoin Déjà Vu. It took 7 months last year for Bitcoin to end its consolidation period before finally escaping into the range to the upside in September. And here we are again. We are in August already. September is 28 days away. And then the big kickoff happens. I also, Titan of Crypto, hope you didn't mind, I added some more gray arrows here. H1 2023, sideways movement. H1 2024, sideways movement. After we did have the big spike in January, of course, with the launch of the ETFs. And Feb was pretty good too. But since then, sideways consolidation. Now, so far, we got recession. We got seasonality. What else do we need to really spice things up? Oh, rate cuts. Rate cuts are coming in. Guess what else? Boom, right on cue. Global liquidity just hit a new all-time high. This is from By the Numbers from Bitcoin Magazine. There we are, ladies and gentlemen. As expected, I expect 100 trillion of global liquidity in 2024. We still have another 10 trillion to go, but we'll get there. No ifs, ands, or buts. Now, another crazy news too. Just an interesting point, again, from Bitcoin Magazine. MicroStrategy and Blackrock, Bitcoin ETF, both together own 570,000 Bitcoin, worth about $36 billion. What do these two know that maybe we do not know? And of course, I know it's not Larry's personal bag. It's part of Blackrock now. But the point is, these two are vacuuming, hoovering. I always get those words mixed up. I apologize. different flavors of English. They are hoovering up everything like a fiend at a party late on Friday night. Big. And there's more. MicroStrategy, guess what they just did? They just bought another 169 Bitcoin. Not a big buy, but still, nonetheless, I think they wanted to get to a nice round number of 226,500 Bitcoin. And they just snagged this 169 Bitcoin for about $11 million using excess cash from the business. They keep on stacking. So let's have a quick refresher on the MicroStrategy strategy. MicroStrategy strategy. Weird stuff comes out of my mouth sometimes. I didn't mean for that to repeat, but that's what it is. This is the MicroStrategy strategy. And it shows you the outperformance since adoption of Bitcoin. I've shared this before, but I want to share something a little bit interesting as well. NVIDIA is claimed to be the top performing asset, but no, it's not. No, it's not. MicroStrategy beat it since August 10th, 2020, when they first snacked on Bitcoin. And here we have other names, NVIDIA, Tesla, up 145% the same time frame, which actually sucks what the company is, but it'll do a lot more in the near future, trust me. Google, 131%, Microsoft, 101%, Apple, 97%. Apple's having a good day today, by the way. Everything's red, Apple's up. Meta, 81%. Netflix, Amazon. In fact, if you're holding Amazon and Netflix for the last 4 years, you're not treading water, you're drowning. So remember that. And a quick reminder, everybody, in full disclosure, over 80% of my holdings are in 4 things: MicroStrategy, Bitcoin, NVIDIA, and Tesla. I want that to be very clear. There's a reason I have high conviction to very few assets. It just brings about much better returns. And by the way, the returns for MicroStrategy have been absolutely mind-blowing. Anyway, let's get into the black hole time. The playlist for all the Bitcoin only, Bitcoin and proxy videos will be here afterwards and at the end of the video too. Let's look at the black hole because there's also interesting stuff happening. Remember these two guys? Well, there's others snacking on Bitcoin too. And Morgan Stanley are going to drive a lot of sales as well. We are at day 141 and we've only had 2 negative days in the last 20 days. And those negative days weren't even that negative. So all in all, it is going pretty well. This is a view. We have a very unusual green spike for the first time ever. What the hell is this green thing? Well, that is called GBTC BTC. And for those who missed it yesterday, Grayscale launched their mini Bitcoin trust, which is at the same competitive rate of 25 basis points like the other funds. And that has stemmed the bleed from the mothership GBTC. There's probably a little bit transferring from GBTC into the mini fund, but we had the biggest spike ever. We had another historic day yesterday. Let me explain. First of all, day 141 positive. We had a net flow of about $50 million. Not a big one, but remember, $50 million is still 775 Bitcoin. That is nearly 2 times the daily issuance of 900 Bitcoin. 900 Bitcoin is 2 times. 450 Bitcoin a day is the average. So that is still big. And what is this spike? 5th spike in this video. I should have called this video called Spike. Grayscale and GBTC and their mini, which the ticker is BTC, is up net 120 million. By far the biggest day they've ever had since these ETFs launched. That is positive for the space. And we're only just beginning. So again, let's get through this. We got through the 90-day period. Now we need to get through the recession fears. Hopefully the governments will spring into action. I think the Bank of England cut yesterday. Bank of Japan. The ECB should be cutting real soon. And then it'll be left up to the US Fed to cut as well. And then we're off to the races. Hopefully they do it before September. In the meantime, not a bad time to stack. So with that, hope you enjoy the show. Thank you all for coming. And sorry for the grief tidings. But hey, that's the nature of markets. Investing is a blood sport. Remember that. Nothing goes straight up. Nothing goes straight down. They're very choppy along the way, especially in disruptive assets. Thanks all for coming. I love to see the flags. We have Finland, India, US, Scotland, Canada, all sorts of wonderful places. And thank you all for coming. Have a good day. Bye-bye.